All right, let's just jump right in with a scenario. Imagine a brand new AI model gets released. We'll call it Claude Mythos. And within just a few hours, it finds a major vulnerability in every single major operating system out there. Suddenly, the next global conflict isn't going to be fought with missiles, it's going to be fought with malicious code run by autonomous AI. Now, this isn't science fiction anymore. This is the new reality that's kicking off the AI cybersecurity arms race. This is Project Glasswing. And in this explainer, we are breaking down the biggest consequence and honestly the biggest opportunity of this whole AI revolution.
Okay, so to really get our heads around this, we're going to use a timeless mental model from the absolute legend Charlie Munger, and then what? It's such a simple question, right? But it's what separates the surface-level crowd from the people who really get it. See, first-level thinking sees the obvious. During the gold rush, that was, I gotta go find gold. But second-level thinking asks, okay, and then what? It realized, hey, all those miners are going to need picks, shovels, and some sturdy jeans. That's where the real money was made. Well, today everyone sees the AI gold rush. We're here to ask, and then what? And just to understand the sheer scale of this gold rush, look at this number, $2.5 trillion. That is more than the entire annual economy of countries like Canada or Italy. This isn't just some tech trend, you know? This is a massive, global reshuffling of money on a scale we just haven't seen in a long, long time. In a wave of cash this big, it doesn't just build new companies. It creates huge, often unseen, side effects. It creates new risks, and that, right there, is where we're going to find our answer to Munger's question. So, that brings us to our first section, the first-level frenzy. Before we can start looking over the horizon, we really have to get a handle on what's happening right now. And this is the story you already know, the one you see on the news every night, the absolute gold rush that has totally captured Wall Street and Silicon Valley. I mean, the numbers are just staggering. NVIDIA, the ultimate shovel seller of our time, it actually became the world's most valuable company for a bit. VCs are in a frenzy, throwing $200 billion at startups. And get this, OpenAI's committed deals alone are getting close to the entire GDP of Russia. It's wild. And the physical stuff is just as huge. We're going to need almost $7 trillion just for data centers by 2030. That's going to put a strain on power grids like we've never seen. This is the first-level story. Just build, build, build. So yeah, the first-level story is super simple and honestly pretty convincing. The conventional wisdom is just buy the obvious winners, right? The companies making the models, like OpenAI, the ones making the chips, like NVIDIA, and the cloud giants providing all the plumbing, like Amazon and Microsoft. And look, it's a story that's worked amazingly well so far, but as anyone who remembers the dot-com bubble can tell you, the easiest story isn't always the one that lasts. Which brings us right back to Munger. It is time to ask, and then what? What happens after all this money gets spent? What are the real consequences of this massive build-out? It's time to start looking for the cracks in this shiny foundation, because trust me, they are there if you know where to look. So the first big crack is something called circular financing. It sounds complicated, but it's actually pretty simple. Here's how it works. Amazon pumps a few $1 billion into the AI lab Anthropic. Now, what's the first thing Anthropic does with a big chunk of that money? They turn right around and sign a multi-billion-dollar deal to use Amazon's AWS cloud services. The money basically just does a lap. It makes it look like both companies are seeing explosive revenue growth, but it's really more of a capital shuffle than real customers banging down the door.
And what's wild is that this isn't just a one-off trick. It's kind of the engine driving this whole ecosystem. Just look at this flow. A cloud giant like Microsoft invests in OpenAI. OpenAI takes that money and uses it to buy tons of chips from NVIDIA and to run its models on Microsoft's own cloud. So NVIDIA and Microsoft book these massive revenues, which pushes their stock prices up, which then lets them invest even more money back into the system. It's this beautiful, fragile dance, and it all depends on everyone just keeping the money flowing, whether or not the actual end products are profitable.
And this chart right here perfectly shows the core problem, the gap in return on invested capital, or ROIC. Basically, for a business to work, you got to make more money than you spend, right? Well, to justify the trillions being invested, some estimates say the AI industry needs to be making over $2 trillion in profit every year by 2030. But look at the forecast for actual revenue. It's less than half that. For every dollar being poured in, the industry is on track to earn back less than 40 cents. That's not a business model, folks. That's a bonfire of cash.
And hey, don't just take my word for it. Vanguard, probably one of the most careful, level-headed investment firms out there, says there's about a 1 in 3 chance that this whole AI boom just fizzles out and fails to deliver the economic growth everyone's hoping for. And if they're right, today's multi-trillion-dollar valuations just become impossible to justify. We'd be looking at a bust on the scale of the dot-com crash, where the real survivors weren't the flashy websites, but the boring companies that provided the essential plumbing, like networking and security.
But the financial risk is really only half the story. The true second-level consequence, the real "and then what?" leads us to something much more dangerous than just a market correction. It leads us to the rise of something called shadow AI. And this is the unavoidable technological fallout from this mad dash towards artificial autonomy.
So to really get this threat, you have to see how AI is evolving. We started at step 1, simple chatbots. You ask a question, you get an answer. Easy. But we are just screaming towards step 2, autonomous agentic AI. Don't think of these as tools anymore. Think of them as digital employees that can go off and do complex things on their own, like booking your travel, filing expense reports, even negotiating with another AI from a vendor. And then comes the final and frankly terrifying step, deep enterprise integration. This is where we hand these agents the keys to the kingdom, direct read and write access to a company's financial systems, its customer databases, all of it.
And this is where the danger really comes into focus. Picture this. An ambitious sales team wants an edge, so they start using some powerful new AI agent that the company hasn't approved to analyze data and automate emails. That's shadow AI. It's all happening without the IT department knowing a thing about it. It creates this hidden, parallel network inside the company, unmonitored, unsecured, and hooked up to the internet. It is a defender's absolute worst nightmare. This shadow network just opens up a Pandora's box of new attack methods that traditional cybersecurity just isn't built for. Bad actors can use data poisoning to subtly teach a company's AI to ignore their specific kind of fraud. They can use prompt injection to trick an agent into ignoring security rules and running malicious code. They can even get these agents to hallucinate and leak company secrets. Every company that's rushing to adopt AI is accidentally building 1,000 new backdoors for its enemies.
So all of this brings us to the core idea behind Project Glasswing. This brand new, unprecedented, and pretty scary threat landscape creates an unavoidable response, the AI security arms race. The single biggest, most sustainable business opportunity of the entire AI boom won't be building smarter chatbots. It will be the multi-trillion-dollar scramble to defend, control, and secure them.
Let's go back to our gold rush analogy one last time. First-level thinking bets on the miners. That's your OpenAI. Second-level thinking is smarter. It bets on the companies selling the picks and shovels. That's NVIDIA. But the third and deepest level of thinking invests in the company that builds the bank vaults, the locks, and the security that protects the whole town's wealth. That's a business model that lasts long after all the gold is gone. That is the AI defense sector.
Okay, so this all sounds good in theory, but how do you actually turn this idea into a real strategy? How do you get past all the hype and start investing in the digital fortress that this new world is going to desperately need?
All right, so the key is to contrast these two ways of thinking. The first level stuff is crowded. Everybody's talking about the model makers, chip makers, and cloud providers. The second level thinking looks at the boring but absolutely essential infrastructure. And at the very top of that list is AI security. But even there's a big debate. You've got the old guard, like Palo Alto Networks, trying to adapt their old-school fortress-style security. And then you have the disruptors like CrowdStrike. Their whole approach is different. They focus on securing the endpoint, the individual device or agent, by assuming the network is already compromised. Their platform is built for this new, messy reality. So the big question is, in a world full of autonomous AIs, do you bet on the bigger fortress walls or the faster guards on the ground?
And here's the brutal truth of it all. If you think you're diversified because you bought some AI ETF, you really need to look under the hood. The data is clear. The vast majority of these funds have something like 80% of their money tied up in just a handful of chip makers and cloud giants. They give you almost zero exposure to the AI defense companies we're talking about. You're not actually buying the whole gold rush ecosystem. You're just buying the most popular miners and forgetting all about the guards protecting the vault.
As we start to wrap this up, it's so important to remember that the history of tech is basically a graveyard of giants. Remember Nortel? Remember MySpace? BlackBerry? Creative destruction is this unstoppable force. The companies that look invincible today can become totally obsolete tomorrow if they can't see the second-order effects of the very technologies they helped create. Which leaves us with one final question to think about.
As we move into this new era of truly autonomous systems, who do you think will end up holding the real power and creating the most lasting value? The ones who create these powerful, unpredictable AIs, or the ones who build the systems that guard, control, and contain them? The answer to that question is going to define the next decade of tech and investing.